Let's start your investment journey.
Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, the 8th of November. We have just left behind us a volatile trading week and a busy economic calendar, which kicked off November 2021 trading activity. We are heading into a slightly quieter week, which starts with Chinese trade balance data on Monday. On Tuesday, we should be on the lookout for Eurozone ZEW economic sentiment survey. Going forward, on Wednesday, China and also US consumer price index figures and US initial jobless claims and crude oil inventories will be closely watched. On Thursday, we should be on the lookout for Australian unemployment change, UK manufacturing and industrial production figures, and GDP Q3 data. The week will finish on Friday with Eurozone industrial production figures and US Michigan consumer sentiment. Now, let's take a look at few markets. Let's start with the Bitcoin. Bitcoin price action is coiling sideways. We had a breakout earlier which resulted in an extension to the upside. The price action is uptrending overall, supported by multiple rising moving averages and also a number of rising trend lines. The key trading level is at 60,000. As long as 60,000 level holds, bulls are in charge, potentially looking for the extension to the upside. Therefore, rally from the current levels and a breakout above current daily swing highs at 64,000. Retest of that level from above as a newly found support could open the way for the extension to the upside, targeting additional resistance at 66,800, possibly even 70,000. Alternatively, we see a corrective pullback loss of 60,000 that could open the way for another retest of these swing lows from 27th of October at 58,230. German 40 or the DAX index is uptrending quite nicely, creating the sequence of higher lows and higher highs. The current price action is supported by multiple rising moving averages. Key trading level going forward is at 15,950. Pullback to that level and a rally, or a rally and a breakout above 16,100 could open the way for the extension to uncharted territory. So take your pick: 16,200, 300, 400 and so on. Alternatively, we see a corrective pullback and the loss of 15,960 that could open the way for more meaningful corrective pullback, targeting additional support at 15,860. NASDAQ is uptrending as well, higher lows, higher highs. The current price is supported by 16,100 to the downside. Pullback to that level and a rally, or a rally from the current levels and a breakout above 16,500, round number, could open the way for the extension of this bullish run towards 16,600, 700, 800. Take your pick, it could be even 17,000 over a longer period of time. Alternatively, if you see a corrective pullback, loss of these lows down here at 16,100, retest of that level from underneath as a newly found resistance that could possibly indicate a deeper corrective pullback towards additional support at 15,700, 15,500 zone. Let's talk about euro-dollar. Euro-dollar is downtrending at the moment. We had significant US dollar volatility last week. The key trading level for euro-dollar is now at 1.1650, which is this area up here. We had support, loss of support, retest, and continuation in this overall prevailing downtrend. So rally from the current oversold levels into a resistance towards 1.16, possibly even 1.1650, and then a rejection would likely trigger the extension to the downside. Alternatively, we see a corrective pullback from here. A loss of these lows would also indicate the possibility of the continuation to the downside, targeting additional support at 1.1490, 1.1450, 1.1420, 1.14 even to the downside. Alternatively, we see a rally and a breakout, an end of day close above one spot 1650 and a retest of that level from above that could trigger a short squeeze targeting additional resistance at one spot 1750. Cable also had another leg lower, disappointing reaction to Bank of England rate decision and subsequent monetary policy statement and the press conference resulted in another leg lower. Cable is downtrending, sterling dollar is downtrending, the current price action is capped by multiple falling moving averages, and the significant development is the loss of this rising support trend line. Previous support lost, now it becomes resistance. So the key trading level going forward is at 136.20 on the upside. A rally from the oversold levels into that level and the rejection to the downside would be bearish, potentially opening the way for the extension to the downside, targeting additional support at 1 spot 34, 1 spot 33.50 and lower. Alternatively, we see a breakout and an end of day close above 136.20 that could open the way for a short squeeze targeting additional resistance in this zone here at 1 spot 37.30, 1 spot 37.80 to the upside. Dollar Japanese yen is consolidating sideways. It's almost like a coiling price action here with high, slightly lower high, low, another low here. So there is an energy build up here, and these type of patterns, they usually precede an explosive reaction. So the key trading level going forward is at 113, 112.90. So it's a zone of about 10 points for the bulls. As long as that level holds and we see a rally from the current levels and a breakout above 114.50, retest of that level from above, that could possibly trigger the extension to the upside, continuation of this bullish trend, targeting additional resistances at 115, 116, possibly even higher. Alternatively, we see a loss and an end of day close below 112.90 and a retest of that level from underneath that could possibly trigger a deeper corrective pullback, targeting additional support at 111.80, 111 to the downside. Let's talk about gold. Gold had a bullish counter trend breakout higher. The key trading level is at 1800 now. 1800 pullback to 1800 and a rally or a breakout above current resistance at 1826 could open the way for the continuation of this short squeeze counter trend breakout higher, targeting additional resistance at 1840, 1850, 1865, possibly even 1875 over a medium time frame. Alternatively, we see a corrective pullback, loss of 1800 support, possibly that could open the way for another retest of additional support at 1790, followed by 1780 to the downside. Crude oil had a corrective pullback. Key trading level for crude oil is at 80. The crude oil longer term trend is still intact. Crude oil is still very, very bullish. This appears to be a sideways consolidation here. Bulls require a push higher and a breakout above 82, 82.70. Retest of that resistance area as a newly found support could open the way for the extension of this bullish run towards additional resistance at 84.60, 86.87 to the upside. Alternatively, if we see a rejection from these current levels and the loss of these swing lows at 78.40, that could change the outlook, potentially opening the way for more meaningful and corrective pullback towards additional support at 77, 76, possibly even 74 to the downside. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.
Let's start your investment journey.